Stocks see a sell-off across most sectors as the Nasdaq dip prompts profit-taking after the strong run-up. Banking, FMCG, metals, autos all slide. Reliance, Pharma and the IT pack holds up. Meanwhile, gold crosses 50,000 rupees per 10 grams. Fang fever seems to have gripped the Reliance stock as it continues its unrelenting climb. Jefferies' Chris Wood points to under-owners hit by mutual funds as a key reason for continued buying in the counter. The stock of Sun Pharma jumps after the company's subsidiary Taro reaches a settlement with the U.S. Department of Justice for $200 million. The company also offers to pay another $213 million to settle federal healthcare claims. And rural demand shows signs of fading in July, warns Credit Suisse. Technopac 2 sees a surge in rural consumption as sustainable on lack of jobs in the hinterland. The development signals concerns for FMCG companies that were hoping to ride on the rural consumption to grow. And a day after Emphasis, Salil Parekh strikes an optimistic note on new deal wins. Emphasis reports a 29% growth in deal wins for the quarter. Even smaller player Zensar Tech talks of a bottoming out of the business. Good afternoon. Welcome to Business Lunch. I'm Samira Abdi. For the market today, we're down about 0.8% on the frontline indices, but then not as down as the rest of the globe. So if you look at the performance in Asia this morning, so Shanghai there was down over 3.5%. European markets are down about 1.5–2% right now as we speak, but our market down under 1%. So we're down, but not as badly off as the rest. And for the week, the Nifty is actually up about 2%. And a lot of this is powered by the up move that we're seeing in Reliance. It's the top Nifty gainer today as well in what is an otherwise weak market. So Prashant is here with some interesting data that compares the ownership in Reliance and Bharti Airtel. Prashant.
The idea behind doing this basically is to figure out whether mutual funds, local mutual funds, are heavily underweight Reliance Industries vis-a-vis what Reliance's own weight is in, the Nifty, the Sensex. You can benchmark it to other indices, etc. And for the purpose of this, just to illustrate that point, what I've done is I've looked at Bharti versus Reliance and how local fund ownership stands in both these stocks. And the reason I've taken Bharti is because, even till a few months back, the entire play in Reliance for most investors was about Jio and how fast it was growing and how it was basically taking subscribers away. That was being seen as the growth engine. That was being considered the new business per se. Of course, now with marquee investors like Facebook, Google, etc. coming in, it's moved beyond Jio. It's Reliance, Jio, and then there's plus. There is a lot of future other new opportunities which investors seem to be building in value for into Reliance Industries. So that's the reason why we are comparing Bharti, still a pure play telco, as against what Reliance is looking like now. All this data, mind you, is, by the way, for the end of June. So at the quarter end, the first graphic will basically tell you the weight of Reliance and Bharti in the Nifty. And as you can see, at 12.45%, RIL's weight in the Nifty is more than 4 times that of Bharti's weight. Come to the second graphic, which kind of puts the entire thing in perspective. This is as of the end of June, how much mutual funds owned in Reliance and how much they owned in Bharti. Just keep that weightage in the Nifty number in the back of your mind when you look at this number. And I think the contrast is very simple. It's out there, plain view. Mutual funds owned about 40,000 crores of Bharti and they own about 54,000 crores of Reliance Industries. The weight difference is over 4 times between Reliance and Bharti. The difference of value ownership between Reliance and Bharti is just about 14,000 crores or so. That kind of, I think, I don't think very much more needs to be said. And I think this is a question which many local mutual funds have been agonizing with as the stock has continued to move higher, pulling the index along. And as mutual funds are not benchmarked adequately to the full weight of Reliance in these indices, those funds have continued to underperform. Many, remember, by the way, have added Reliance over the last couple of months. So, I mean, it's a continuing kind of operation, but still, I mean, the size of the move has been so large that even when you look at figures till the end of June, I mean, the difference between ownership and the actual weightage is actually very, very large. Okay, just wrapping this up with FII ownership of Reliance and Bharti, I think here it is much more aligned to what the weight itself is. They own, FIIs own about 61,500 crores of Bharti. They own about 2,60,000 crores of Reliance Industries. So that's roughly about 4 times or so. So this is, broadly the numbers that I wanted to put out. The question is, something's got to give. Will mutual fund managers throw in the towel, start to aggressively accumulate Reliance to benchmark themselves as the weight has gone up? Or will they still fret about valuations and other things, which perhaps is one reason, only one of the reasons why it's kept them away for so long? Back to you.
All right, Prashant, thanks very much for that. Meanwhile, some news flow coming through on IndusInd Bank, and it's important. One of their existing investors, that's Route One Investment Company, that's a hedge fund, they have received the Reserve Bank approval now to hike the stake in IndusInd Bank to 10%. Earlier, they owned less than 5%, I think 4.96% to be exact, and they can now raise this stake in IndusInd Bank to about 10% odd. We'll have somebody joining in, one of our reporters, to explain this for us and explain how important this is for IndusInd Bank and what it will mean. But for now, let's talk about one of the other stocks, big stocks in focus today, and that's Pharma. The stock has gained on the back of some positive news coming in from the US market, where their subsidiary Taro has settled the price fixing litigation with the Department of Justice. Sonal Bhutra is here with the details.
Thanks a lot for that, Sumaira. Well, as you rightly pointed out, the subsidiary Taro has settled a price-fixing litigation with the Department of Justice in the US. It was an ongoing litigation, and this particular settlement pertains to the period between 2013 to 2015. Now, Taro has gone ahead and made settlement claims of around $205 million. That is what they will be paying the DOJ. Additionally, they will also be paying around $213 million. That is to resolve all claims related to federal healthcare programs. So the outgo really is around $410 million. Now remember, back in May, Apotex had also settled one of the price-fixing litigation cases and paid $24 million. And analysts back then had expected all the generic companies to come forward and settle the case. And for Sun Pharma itself, they had predicted a liability of around $300 to $500 million, or maybe a little higher. So this amount is in line or maybe lower than what the street was working with. So a little bit of that overhang is gone. But do remember, there are some more litigations going on with around 45 states. There was a recent case in June for the dermatology portfolio of Taro for the price-fixing litigation case. So more clarity is required whether immunity is provided for the cases that are undergoing with the 45 states and what happens with the other litigations. But apart from that, a little bit of overhang is gone, and that is what keeping the stock higher in trade today. Back to you.
All right, Sonal, thanks very much for that. Also, Biocon is trading with cuts despite reporting better than expected results. Here's more from the company's executive chairperson, Kiran Mazumdar-Shaw, on when growth is likely to revive and also with the outlook for their biosimilars.
If you remember, in Q4 last fiscal, we had an abnormal quarter for biologics, but we told you that this would be a recovery quarter. And from Q2 onwards, we said we will start showing growth. And I think this is where we are at. I mean, this is a very strong quarter for us because it is the highest ever revenue growth reflected by the biologics business. If you remember, last quarter, the overall, impact was very significant, but the biosimilars business particularly grew from 433 crores to 692 crores this quarter. So it's a 60% surge in quarter-on-quarter growth. And year-on-year also it has grown 19%. We believe that the growth will be much stronger from Q2 onwards. So I think Mylan is very confident that it will make a success of its biosimilars. And of course, right now we're in the mid to sort of slightly above the mid single-digit growth rates in both these products. And I think we should be able to aim for a double-digit growth rate before too long. I think competition in biosimilars is not going to be as aggressive as generics. There will be price discounting, which we have witnessed in both these products.
All right, and now let's go back to that big news on IndusInd Bank. Their existing investor, Route One Investment, has now received the Reserve Bank nod to raise the stake to 10%. Ritu Singh is here with more details. Ritu, what would this mean for IndusInd Bank?
Well, the bank has clearly been, trying to raise capital for a while, and it has been in talks with some of its existing investors to raise money. Now, it is in its press release to exchanges, it has said that Route One Investment Company, which is a US-based hedge fund, which already held 4.96% stake in IndusInd Bank, has got Reserve Bank of India's approval to increase its stake in the bank to up to 10%, which, remember, is the maximum permissible limit under the current RBI regulations. In addition to this, we also know that the promoters have announced their intention to increase their stake all the way up to 26% and have been buying small amounts of equity from the open market. With this acquisition alone, I think the bank will be able to raise upwards of 3,000 crore. That is a figure that we'll have to cross-check again. But back of the envelope calculation shows that it will be roughly the 10% stake will roughly be valued at around over 3,000 crores. So it is much needed capital for the bank. It is yet to disclose its results for the first quarter. So we'll have to see how the capital position will have moved. But deposit side is where the bank had been facing a lot of pressure. It saw a reduction in deposits of up to 11% after the Yes Bank issue, where a lot of private banks were seeing flight of capital. So much needed relief for the bank. We'll have to see if there's further fundraising or, because it continues to remain in talks with some of the other existing shareholders as well.
All right, Ritu, for the moment, thanks much for joining in. We'll take a very quick break, but up next, ITC and Asian Paints will be reporting numbers. We'll take a look at what the street is expecting. Also, SpiceJet has backed the rights to operate on the India-UK route. More details lined up next.